Hello everyone, welcome back to the channel. In this video, I'm going to give you a full step-by-step breakdown of your USD price action and show you how I managed to secure around 8 to 9 hour trade during the CPI news release. As you guys know, I trade liquidity inducement concept, so I'll walk you through how the market created liquidity, induces that, and how I identified it, and most importantly, how I executed the trade with precision, right? So let's get straight into the day, right? So that was around this 12th of August. And let's just move the price back to around this, right? Now, to understand this day, we need to understand what has happened before, right? So before we look at today's session, it's important to understand what happened the previous day. So if we just real quick have our understanding of the previous day, we will be able to understand this day much more clearly, right? So straight away, I can see price tapping into this level of inefficiency, which we say IPA level, doing what? uh, it took out this trend line. Is this a valid trend line? Yes, it is a valid trend line. So if you see this, we have first tap, second tap, third tap, giving at least one structural break, right? So a valid trend line. What price is doing is inducing this trendline liquidity right into a high time frame IPA level. Possible mitigation, I don't know if it was a miss, right? And now the key point in here is that we understand the reaction from this inducement of trendline liquidity and the tap of the high time frame EPA level, right? Now, and obviously, if we understand the reaction properly, we will understand the intentions of the market. So we can see, one main thing is that price impulsively takes down the liquidity, rejects with impulse, with that speed, kind of similar speed, and additional to that, leading a minor internal break of structure, right? So this confirmed that the market is showing bullish intentions, and this might be the pivotal point of a reversal from here, right? Perfect. So after this, my bias was, or you can say that the context was shifted toward more of buys rather than sells. And I expected if we get any sells, that would be to take out those liquidity lows to continue high, right? That we will discuss in a second, right? Perfect. So this was the point that I knew we want to trade away from, and this from here market shifted its intentions to the buys. Now, the step two is we understand what's happening in Asia, right? How Asia session is forming. So during Asia session or just before that, I understand price is bullish, leading to new higher highs and higher lows, giving us these breakout structures. Now we are getting these breakout structure means that we are inviting buyers, right? So we have with those breakout structures, we have this mitigation of what? This mitigation of the smart money order flow, which is again inviting the buyers to take these buying opportunity, right? Now I see it as a liquidity, right? And you guys should too. Why? Because it's clear, right? We aren't trading a normal and obvious smart money order flow. We trade when there is an inducement, right? So it's obvious liquidity that these lows are, sorry, these breaks are inviting the buyers to take positions. With that, if you can see this, it is also having a trend line, which is this a valid trend line, 1 2 3 taps leading us to at least one breakout structure. So a valid trend line, right? And let me just make these red so we know these are not what we're waiting for, right? So identify liquidity. Right now we also have one more point. If you paid attention to this, we have this level of resistance turned into support, right? So now all these confirmations are telling retail traders to get into buys, right? And now when everyone is buying, you don't want to buy. And that's when we understand what price is going to do the next thing. Now, we have understand and identified the liquidity lows. Now we need to understand what's happening to the high. So I clearly see a breakout structure to the downside. a bearish breakout structure, the last one, and we have this liquidity high. Now, why is that a liquidity high? Because this is the last bearish breakout structure that is going to invite smart money traders to look for sales. And if smart money traders are looking for sales, we know that we have what? We have liquidity above this high, right? So now we have understand the liquidity highs and the lows. The only thing now we want to do is simply wait for price to take out the liquidity, right? And yep, let's just play the price. There we go. What do I see? I see speed coming in, taking out liquidity. Now I want to see speed, price reject the same way with speed. There we go. We had the speed. So now I can say that this is a valid inducement, right? High to go lower, and we can trade what? We can trade this inducement till the next point of liquidity, which is this all trend line liquidity and those structure points in between. Perfect. So I actually, this isn't my time to trade, so I didn't took this trade. So we're gonna just play and see what price is doing. And let's go back to London session. There we go. So this is the London session, right? Now, what London is doing is at the open, right? Price swept these Asia session lows, also these kind of Frankfurt lows. What do we have? We had these equal highs, right? Left, making this breakout structure made them more relevant, right? Now we know that market is following this point of inducement, but it never goes the same way. Like it isn't always like this. What it's like is it likes to take out the liquidity, and then as a reaction of that liquidity it moves, right? So we have this liquidity being generated. If I see this, we have all this liquidity. So pretty much this is the point of detachment liquidity level. Yep. So if anyone is looking to get into buys, this is a point you should exit your buys by understanding this. Now if we take out this liquidity, we might have a possible inducement, and let's just see what happens, right? There we go. We had a possible inducement. So it is transferring from this to this, and now we can expect price to move lower again and find ourselves a really clean entry on M1. I didn't took that trade, so I won't really go on M1 and explain that. So let's just see how it works. There we go. Now this is what? This is your smart money trap, inviting all the traders to look for buys, all the early traders. And if I go on M1, this is nothing. This is no valid POI. This is simply injection of liquidity, which means price is inviting early buyers in this leg, right? So again, early buyers getting in. We have that precise M1 entry, smart money reaction. We have another entry, mitigation of this POI. So all these inducements on M1 on the lower time frame telling us market is bearish. So we are waiting for price to take out some valid liquidity, right? And speed coming in. Now we had that speed coming in. We did took this liquidity point, which is the market structure point, right? Structural point. But if I understand this, I see no clear reaction that follows my rules. And again, this is out of my timing. So I trade like New York Open. There we go. So I was waiting for this and I see, all right, market is doing what? Market is simply respecting the smart money order flow, right? Sorry. Yep. There we go. See that we had the minor inducement, inducement. And then what we are doing in here is we are mitigating that inducement, right? So I would like to see price fails that. And also if you see it clearly, what are we doing? We are having a buildup of liquidity at the highs. So this makes what? This makes buyers much more high probable, right? What price is doing? Price is inducing the lows. At the same time, it is creating liquidity highs. So we just wait for some valid confirmations. Look at this, how beautifully price is just creating liquidity. We induce those early buyers. Let me just play. There we go. So perfect. Now what do we have? we took out early buyers again. We had the valid reaction from this point, leaving us what? A valid inducement POI that I was monitoring. New York open, New York just opened, right? And now we see what price is going to do. See this? Now see this, focus right here. What price is doing? Price is still respecting this point of liquidity, these equal highs, right? That means that it is respecting liquidity highs, so building more liquidity for what? For the buys, right? As our targets, right? So let's wait for price. There we go. Price mitigated my inducement POI. I went on M1 and see this. All right, we had a minor internal inducement, and my entry was around somewhere this. Stop loss was around this, I would say, somewhere in here. That was my entry, right? After rejecting from this POI. Now, your target, you could have targeted this as your first liquidity point, but for me, I targeted bit high. I targeted these sort of internal minus structural points for around 8 to 9 hour trade, right? And let's now see how price is going to perform, right? We have everything aligned. We have liquidity induced, we have the reaction, mitigation, confirmation, and timing as well. So the only thing now we want to do is to wait for price to do its thing. And I executed this trade and I avoided the noise on the M1 chart and used the M5 zone instead. Why? Because I knew that there is news, the spreads are going to get wide, and I have appropriate stop loss to protect my position. Yes, it did lead to a lower risk to reward, but on the same time, I was at the safer side. And again, one more thing, trading news before trading, trading before the news or with the news is, I consider that as a foolish mistake, right? No one should trade this way. Why personally I took this trade was because I was quite up for the week. So I was up like 40 to 50 R for the week. Uh, and with that, I had a really strong risk management. So I risk very small amount. So if I get slipped, it won't be a disaster loss for me. So by keeping all these points in mind, let's play this price. And there we go. We just hit what? We just hit RTP in the single candle on M5 straight away. So this is how I, you know, exactly took out the buys on CPI, and it was a really clean trade. So if I could summarize this whole breakdown in fewer points and give you a recap of what we have just done in this whole breakdown, is going to be pretty much in the 4 points, right? So those 4 points are going to be, let me just, there we go, right? So what we did was, previous day we analyzed previous day first, and we understand what happened the previous day. So liquidity grab at high time frame EPA plus break of structure confirm, right? So in here, I just move it right there, right? So breakout structure confirmed the bullish buy. So we had that EPA, we had liquidity being induced into that, we had the bullish breakout structure confirming the bullish buy. Second thing we did was we understood Asia session, what was happening in the Asia. So Asia build liquidity both ways, so the trend line support and inducement of the sellers, right? So there we go. So we build liquidity on the both sides. We induce the sellers. We had the sell reaction. What London did was London swept the Asia lows, injected liquidity, and left behind a valid inducement POI. So again, going back to there, London took out Asia session lows, injected liquidity, no real intentions to move away from this one. And once it did induce properly, it left behind a valid inducement POI. And New York, it was straightforward. There was nothing in New York, right? Okay, yeah. Why is this sound? Let me make it like it out. There we go, right? So New York just mitigated the London POI that was aligning with the higher time frame key levels, aligned with the higher time frame context, and it delivered a beautiful 8-hour trade, right? So if you guys like enjoyed this video, make sure to like, subscribe, and drop the video ideas in the comments. I hope you guys learned something new, and I'll see you guys in the next session, right?